Mr. Gartman comes to us 20 miles from where it's supposed to be no protests. It's not the big city. And yet, Dennis, in your neck of the Virginia woods, there is protest, isn't there?
Yes, it's happened in Virginia Beach. It's happened in Richmond. There have been marches in Norfolk. There have been marches in Hampton. Portsmouth, where I live, has not had anything, or where I live very near, has not had anything thus far. And Suffolk, where I actually do live, has had just a very peaceful march. But all around us, my daughter's in the news business in Raleigh, and Raleigh has been on fire for the past couple of days. It's just, this is very frightening, very disconcerting, and I think it plays into the hands of the Chinese. I think it plays into the hands of the Russians. The Chinese are going to look at this and say, look, if the United States of America calls in troops to quell the violence, why can't we do the same thing in Taiwan? Why can't we do the same thing in Hong Kong? And I think that's something that people have to start paying attention to.
Dennis, anyone that knows your work knows that you have a cast of Abraham Lincoln and the Elephant Party. Great. But you were one of the first and harshest critics of this president. How does the Republican Party regroup with a one-term Trump or even with a two-term Trump?
It's a very serious question, isn't it? And with the poll numbers coming out in the past couple of days show a very marked decline for the popularity of the president and the possibility of a Democratic president and even worse, a Democratic Senate. How they're going to resolve this is beyond me, to be quite honest. Thank goodness I don't have to make that decision. But it does appear that we have a president who's going to call in the troops and take a very substantive law and order perspective. That's going to have some support amongst his 33% holdouts that are just absolutely Trumpistas from the start. We'll see how that prevails with the other 67% of the population. But I'm glad I don't have to be the one to make the decision.
You would think that given the fact that the prospect of military troops entering America's cities might be somewhat concerning to equity investors, the tail risks are increasing and being added to each day, and yet we are seeing equity futures higher, and this has been a consistent theme, and a lot of people point to Federal Reserve action, in particular the increase of the fiscal deficit. How does this play out in markets? In other words, can Fed and fiscal stimulus basically offset all of the rising tail risks and make you bullish on certain risk assets?
It makes me, the only place that I can actually be bullish even modestly is the fact that I do think the yield curve is going to become more positively sloped. The back end of the curve rates are going to go higher. The short end of the curve rates are going to go lower. And that's going to be beneficial to the banking industry. But otherwise, other than that, I'm hard-pressed to come up with a bullish rationale. As Lord Keynes once said, though, the market can remain irrational far longer than you or I can remain solvent. And the fact that the stock market has been predicated upon a bull run, predicated solely upon, as far as I can see, monetary expansionary policies by the Federal Reserve Bank and by other reserve banks around the world, I guess we're not supposed to fade the Fed, but I do find it difficult being bullish. I applaud those who've done it, who've gotten bullish. They have been profited, but I find no sense in them whatsoever.
Dennis, to your point, we are seeing the U.S. yield curve widen quite substantially. The gap between 30-year and 5-year Treasury yields now at the widest since 2017. What is this pricing in? Does this indicate some sort of inflation longer term?
I think it does, Lisa. I think that's exactly what the market is beginning to understand, that thus far, the monetary expansionary policies that have been extant around the G7, G8, G9, G12, whatever you want to call it, have not been inflationary, but eventually they shall be, and I think that's what's going to happen. The grain market doesn't make new lows. It starts to hold its own. Gold in U.S. dollar terms has been very strong and likely to continue to be strong. We're starting to see inflationary pressures as far as labor is concerned. So I do think that that's what's happening, and I think that the yield curve gets demonstrably more positively sloped. As I said, the back end of the curve, I think rates can go up past 2% without any difficulty. And it's hard for me to understand even how that we've been under 2% to begin with, because when I first started trading in the 1970s on the Board of Trade in Chicago, the long bond had a 14.25% coupon, and you couldn't give it away. But we're going to go back above 2 or 3 or 4% in the long bond, and at the short end of the curve, overnight Fed funds are likely to remain close to zero. So the yield curve gets demonstrably positively sloped.